Testing. Yep.
You're good to go.
Tēnā tātou katoa. Welcome, councillors, to the Finance and Performance Committee meeting, 12th of July 2023. Nā mahara mai, manawatia mātariki, titiro koe ki te tupuarangi ngā whetu. Kia ora. I'll begin with karakia, whakataka te hau ki te uru, whakataka te hau ki te tonga. Kia mā kina kina ki uta, kia mā tara tara ki tai. E hi a ki ana te atakura, he tio, he huka, he hauhu, ti hei Māori ora. Tēnā koe. Te whare e tēnei tēnā koe, te mana whenua, e te whenua, tēnā koe. Te kaukauhira rohe o wai kirikiri, te kaimahi, te kaunihira, tēnā koe, e te tangata, people of Selwyn, kia ora. Welcome. I have apologies first up. Apology here from His Worship Sam Broughton. Apology from Councillor Dean, and an early exit of Malcolm Lyle. I'm happy to move those if you have a seconder. Kia ora, Elizabeth. No. Thank you. There's no identification of extraordinary business, no conflicts of interest unless there is. There being none, and no public forum, we'll move to the confirmation of minutes public. You have the minutes in front of you. Do I have any discussion from councillors of those minutes? There being none, I look for a move and seconder. So move Councillor Lyle and seconded Councillor Lydia Glynn. Thank you. 7.1. Sorry. Oh, chairperson's report. Sorry. There it is. Excuse me, I'll just find that on here. Take my report as read. I will just pass on thanks to our outgoing CEO, David Ward. Support for our interim CEO, Tim Harris, and look forward to the arrival of our new CEO, Sharon Mason. Are there any questions pertaining to my chairperson's report? Oh, yes. Thank you, Sophie. Kia ora.
Yeah, I just wanted to note on page 22, so the second page of your report, you've got with the third largest territorial authority.
Yes.
We're the third largest in the South Island.
Thank you.
Just
so no,
it sounds a wee bit, yeah.
Ambitious.
Maybe one day, but we're not, you know, beyond
50 years ahead, Sophie, that's probably why. Change to the future, Selwyn. Thank you very much. I'll make sure that's rectified. Appreciate you picking that up. Shows very good diligence. Kia ora, Sophie. Thanks very much. Also point out the opportunity for, as members of the Institute of Directors, that our past councillors have put in place for the development of ourselves, the opportunity to attend not only the Finance Essentials course through the IOD, but any of the courses that pertain to the development and prudent stewardship of our district. I look for a move and seconder for that report. Move it, Deputy Mayor Lyle, and seconder Sophie McInnes. Thank you. Well, sorry, all those in favour, say aye. Those against, there being none, moved. Thank you. Carried a long way. Next report on the agenda is a finance group manager report to the committee from Kelvin.
Thank you, everyone. Good afternoon. Just really a summary of what some of the activity is going to be within this report, but I just want to draw your attention to the last point around annual report. So we are now officially into a new financial year. We're commencing the year-end reporting. Audit New Zealand have indicated they're going to be on site from the 18th of September to close down on the 31st of October, which is the statutory deadline. This timing is very similar across other councils in the Canterbury area, which raises questions around capacity and delivery. I am meeting with them along with Alison Snedden, who is my head of finance, next week to discuss that timetable and where we'll get to. But it's good we got that moving. And I'd like to just take this opportunity to introduce Leandra Fitzgibbon, who is sitting in the manager's area over there, who has joined as head of legal and risk. So it has been a long awaited role in terms of getting us moving from both putting a bit more structure around how we deal with some legal matters and use our quality support organisations, but also and stepping up our risk game. And for those who are members of the Audit and Risk Committee, it'll be Leandra will be a key feature in those committee meetings. I'll take questions if there is any.
Councillor Miller.
I had a query from a ratepayer as to where would be the best place for them to acquire or get hold of the annual report. And I suppose the last one will be this currently won't be on the website or anything yet. I mean, but is the previous one on the website?
Yeah, the previous one will be, and I think this one, well, not this one, but yeah, the one we signed off in April is definitely up on the website. So it'll be in the reports and policies section of the website.
So timeline for this, when will this likely appear on the website?
For the year ending we've just been, if we adopt on the 31st, it should be up within a week of that, 31st of October.
Thank you.
Thank you very much, Councillor Miller. Thank you very much, Kelvin. Just speaking to the reports, I wonder if there's an opportunity to put some of our more pertinent reports within diligent, perhaps like the audit, so we don't, as councillors, searching on the website, they are easily found within our documentation diligent. If there may be a potential to do that. And I just wanted to potentially ask Leandra if you had, if you would like an opportunity to speak and tell us a little bit more about yourself, if you would like to. Good up. Also acknowledging you, Trish, and your wonderful work that you're doing for the council.
Kia ora. So happy to tell you a wee bit about my background. So I've been a practicing lawyer for just under 20 years, first 15 years in private practice in both the South Island and admitted as a barrister and solicitor in the UK. The last 5 years, I have been an in-house lawyer and managing partner for Genesis Capital, which is a small South Island-based private equity firm, managing a diverse portfolio of investments. I was attracted to this role because I've always had a passion and been very involved in community, especially down in mid-Canterbury. I was the chairperson of Community House down in Ashburton for about 10 years and was heavily involved in working with council to acquire a community house. And I've also been involved for a number of years with the Ashburton Aquatic Park Charitable Trust and the Lakehood development down there, as well as working with a number of JVs with council down in mid-Canterbury and Southland. So the opportunity to have this role and join council was great. New role, blank canvas, and get to have some real impact in terms of how legal and risk is managed within Selwyn.
No mahara mai. Thank you very much, Leandra. I really appreciate it. We could always do with another Lakehood and Selwyn, couldn't we? With one, at least. Thank you very much. I have a movement and seconder for that report. Kelvin's manager's report. Bob, Mugford, Councillor Mugford, and Councillor Lyle. Seconded. Thank you. Those in favour? Sorry. Those against? There being none, carried. Moving on to tab 11, page 24 on diligent finance and performance report, Kelvin.
Thanks, Shane. We'll, in the period of 1 July to 31 May, just take her through the summary of it. So on the second page of this report, we've got a net surplus of 3.6 million ahead of the plan. So that's actually ahead of where we intend to be at the end of the year. So good progress there. Capital expenditure following the same trajectory as we had previously. And we've spent 76.3 year to date. Just to draw your attention to the regulatory space, as Tim referred to in the previous meeting around building consents, quite an uptick in where we've been heading there and getting closer to the 100% level within the month, which was really good progress. So a combination of just effectiveness and efficiencies and the state of the market. The one thing I do want to draw your attention to is the issuing of limbs within the 10 working day statutory limit. As I mentioned in the last time we gathered, we had a serious staffing issue where we had effectively lost all our limbs processing team. We've rebuilt that team and we're back on track now. And yesterday we were issuing limbs on day 7, which is good progress. And the great learning from this is we've now identified a number of opportunities to streamline this, and ultimately sometime in the future, in a more distant future, I'd like to be able to see this as being fully automated. So you pay your money and you get your limb type thing in a very short time frame. Regarding the other stats around facilities, all exceeding, but I will draw some attention to revenues on those shortly, and our service levels are all meeting expectations. If we move through to page 27, facilities revenues are up on last year, and year to date tracking reasonably well within the polls, but we are still having some issues around the community centres. So our major facilities are meeting expectations, but we still have the challenges around revenues within the smaller facilities, and therefore that revenue is down slightly from where we'd intended it to be, which you'll see on page 28, where community income is 0.36 million below budget. Development contributions up on where we intended with the budget, but they are down quite a bit on last year, which just reflects the level of development occurring at the moment, and just some of that is timing around as and when developments are moving through. Population growth is having a positive impact on our rate collect. Moving through to page 29, operating expenditure. The large negative variance, or a couple of large negative variances, which have stabilised, being the transport, which at 4.28 million above budget. So that's we've got with flooding repairs, which had flown on through 2.2, and then we have the sealed maintenance program of 1.6 over. That over budget variance has steadied. Consultancy and professional fees are up. Some of that is relating to building consents where we outsource, which is a continuation of the practice we've held for a number of years, and that's offset by some revenues. In other spaces, we're using consultants and other contractors, which are filling gaps where we do have some staff vacancies. And typically an organisation of this size probably runs at around about 5% vacancy level at any one time. And that's just through natural attrition. If we move forward to page 32, which is capital expenditure, 22.76 below where we had intended to be at this time, and well below where we want to be a year end. As we talked about during the budget, the annual plan, when we adopted that, there's a significant amount of carry forwards going into next year, and work is underway around how we manage projects and how we get more tight on our forecasting of where spend is going to be, but that'll be discussed in the major project report. From a balance sheet point of view, some additional debt, we'll touch on that in the Treasury report. Investments are what they are, and through revaluations this year, we'll see some lifts in that once we get through the final accounts. And performance metrics, really no difference to where the areas of concern are, although noting that the building consent piece is improving, but because of the historic position we're being in, that annual year-to-date number will track well below what the target was. So happy to take questions. Thanks, Mr. Chair.
Thank you very much, Kelvin. Councillors, Councillor Breed.
Thanks for the report, Kelvin. So you're talking about vacancies predominantly around 5%. Do you know what we're sitting at?
Not right at this minute, but it does fluctuate. Best place to go and see that is probably actually on their vacancies piece on that website around jobs. So we do have a few of those listed. What I would say though is we've taken a different approach through the annual plan this time, where we have provision for those vacancies just to make sure that we're not over providing. And we have had the organisational change, which is seeing a lot of new bodies coming in. So the vacancies are, remember, this is a year-to-date figure, so it was early on where we had the majority of the vacancies.
Thank you.
Thank you, Councillor Reid. Councillor Miller.
You made mention of it, Kelvin, in your preamble about the consulting and professional fees being over budget by 3 million and it being offset by increased fee revenue. That doesn't seem to show up on the sheet, on the balance sheet. It doesn't show us receiving an additional close to $3 million of revenue. It's actually tracking at budget, or in the council funding impact statement slightly behind budget. So where is the $3 million in increased revenue?
Yeah, so it's a partial offset, because the other part of it is through the vacancies that come through where we've used consultants. Page, just bear with me, page 28, and we talk about the regulatory income, there's our total fees and charges are over by 0.25, but the regulatory income which is the building consenting piece, is up by $500,000 there. So that has come back in this month, but we are
Still
offsetting
2.5 million shy of what the overspend is, though, aren't we?
yes, and I suppose the challenge there is managing that number down, but also completing what we need to do.
Maybe the narrative needs changing, because it gives you the expectation that we have an overspend, but we've got an extra $3 million of revenue to offset it. But it's not. So there's an overspend in consultants, and isn't it?
Yeah, no, that's fair call.
Second question, it might be relatively simply answered around page 33 around the rates receivable. Is that just a timing issue, the big blowout from the year 2.72 million to 19.12? That's the timing of the rates invoices being released, that we've got that large rates receivables, 19 million.
Yeah, there will be, and so a large amount of that collection occurs in the early June period. So we'll see that fall away in the next period
rapidly and get back into line again around that sort of 1 million to 2 million.
Yes,
yeah,
it will be up slightly on this year, where there is a bit more challenge around collection, as you'd imagine, with cost of living being high. But we don't have a debt issue per se, and we're just keeping on top of that reasonably well.
Thank you.
Thank you very much, Councillor Miller. Are there any other questions from councillors? I have a few questions, Kelvin.
Sure.
Actually, related to the last report, and it was just if you had any feedback on the process with the auditing process, if you've got any feedback on that, what that process looks like and how it's being managed and how we see it moving into the future. I think you mentioned it around potentiality of the digital systems. I'm just looking at the balance sheet, page 25. We're taking into account the income from the DCs, and currently, if we took that 39 out, we'd be sitting at a $10.5 million deficit that would have to be rate funded. I'm just looking at the percentage that district contributions make to the revenue, and if we, from a planning perspective, slow down on that, the growth, especially continuing infrastructure and maintenance, will need to come from somewhere. So I guess at a forecast perspective, there'll need to be some consideration going forward. The question around consenting and regulatory, and how many months or missed targets does it take before a TA loses authority to do that, to consent? Sorry, I've got a few here. Page 30. What activities does the democracy line include? And we've discussed payments to staff wages, salary. Gross sales from assets go to where? Do they go to the investment fund? Where particularly does that return go to? And my last question is the 190 number 0.19 on page 34 to the LGFA. I guess that's our contribution to the local government funding association or industry, and that just sits. So does that increase or decrease? And finally, Leaston Medical Centre isn't mentioned on the, or perhaps no, it isn't on the page 34 is investment property. Just a clarification on that, please.
Right.
There.
So in regards to auditing is becoming more and more challenging for the auditing sector, for the fact that there is greater responsibilities for them to review things, and it's becoming much more than just a pure financial audit, which has been traditional. So they're auditing compliance with water standards. The future will be seeing them report on compliance around carbon emissions and how we manage those and deal with those. So the pressure on the auditors become greater. How we manage the relationship with them is they use technology, which is an audit dashboard where they're putting their requests into that and we're responding through that. So the need for auditors to be on site is becoming less so, and for some of the more remote councils that are in the Canterbury region, they don't even see their auditors on site. So that's changing.
Mm.
In terms of the development contribution on the balance sheet, Shane, can you just point to the page that was on?
So yes, got my note here on page 25. Which isn't the correct page, I believe, Calvin.
I suppose
The revenue, yep,
without having seen it, so if our growth was to decline or we had a rapid
28.
Fall in growth, what would occur then is that we'd have to deal with the projects that we have in front of us. And so we're using development contributions to fund the growth portion of a development, which means we've needed to put that in place because of growth. So if it means a new wastewater system for a township which is growing because of consents being lodged, then you put that through and you gather the development contributions to deal with it. A shortfall potentially would occur if we've built that ahead of the growth, which you typically would in those scenarios, and that would be a question then we'd have to deal with. How do we actually fund that growth? But would be after the build. If growth was falling down, you'd be addressing the further stuff, and you'd probably be able to manage it in that way. In terms of maintenance, development contributions do not attach to any maintenance. That's your general rate, and the other rates are dealing with that. So it's two separate issues. The development contributions are funding capital works, which are either delivering services for the additional growth or backfilling, for a better word, into projects where they need extra capacity. Consent timing, that's really is a question for Tim and his team, but annually there's a review of our compliance and how we perform. Delivery around the timeframes is one factor, and as Tim said in the meeting earlier today, that all councils in New Zealand are facing the same problem, and therefore there's a bit of leeway given around that timeframes. Because yes, you could take away the ability to issue consents, but if you did that to every council because they were having time delays, we'd have no one being able to issue consents. So it becomes a bit of a circle on that.
Okay.
The democracy line is largely the cost of running the councillors. So it's your remuneration and any other training and support costs which go along those lines. And then LGFA, what that is every time we borrow, we are effectively increasing our shareholding in them as an organisation. So it's not about their running costs per se. And finally, Leaston Medical, I'd need to look into that, but it's there'll be how that asset has been allocated and how it is joined up with other facilities there, which maybe means that it sits elsewhere.
Thank you very much, Calvin.
All right.
Just in relation to the democracy line, the question was asked because I noticed in the last annual plan, or perhaps the long-term plan to this annual plan, there's a decrease in that line by 2%, which actually is a savings back or a more efficient running of council. Councillor Hassan.
Thank you. And thanks for asking those questions, Mr. Chair. I guess my issue is around, and I know it's coming up in a workshop, is around risk of infrastructure. We collect DCs from developers and we're buying the infrastructure. But with regards to the Pine site, what we've been doing is adding ahead of time communities into that infrastructure that haven't necessarily paid the DCs that we have consequently planned for. So basically we are using up the spare capacity more than what our localised growth was when we actually planned that particular plant. And this is really, really important because we're landlocked. We don't have a B and we're dependent on land to dispose of that effluent. Now, my understanding is that we have one irrigator left with the land capacity that we've currently got. I think we're consented for 7 millimetres. The last information I got from Murray, England was we were 6 millimetres per day. And currently the ground across the whole of most of Selwyn, or at least in the lower part, is at saturation rate. So we may face some very serious compliance issues with regards to the consenting of that. And that to me is a real risk in where we're sitting with regards to the DCs that we've collected, the providing the infrastructure for other communities outside the ring-fenced area when it was first designed. And I just want to highlight those particular issues because they have an impact, a big impact on our ability to grow. If we can't supply infrastructure, there's no growth, there's no increase in rates, and Selwyn will be at a standstill. And we can't just sit here and wait till 2026 until these entities come on board, because these entities, by the time they're trying to bed themselves in, I can foresee that Selwyn, it's got all new infrastructure, it can go to the bottom of the list. They will not understand how we've actually planned for that infrastructure and why we've set our DCs at a level that we have. And we've been very prudent with developers with our DC, which has attracted a lot of growth. And we could be in an aspiring position if we don't actually manage our infrastructure up front before the head of development. So I just want to highlight those particular risks from a financial situation with where we are with our growth. Thank you.
Thank you very much, Councillor Hassan, and imperative to the future of Selwyn. Thank you. Do I have a move in second for that report if there are no more questions? Councillor Miller.
I'm just not sure that, Calvin, you gave I may have missed it, just the explanation on borrower notes. I think it's important for the council to understand that, how we're required to buy borrower notes when we do.
So to do, it's a complex space, and probably covering off here in the Treasury report next would be as good a space, but given we're going there next, that's good. So as we borrow, we're receiving a borrower note, which is reflecting effectively our share within our GFA and our risk in terms of that. So we're all collectively part owners, all the borrowers there, and we all carry a collective risk against collapse. The beauty of this is the government back it, and if all things didn't go well, we'd be expecting a government to step in. But it's sort of reflecting our piece of the action in terms of how much we've risk that we've got within it. I don't know if that explains it enough for Grant or.
Yeah, it's proportionate to the amount you draw down, isn't it? But I think the key issue, and I'd like clarification. You said the government would step in. My understanding is that the local authorities themselves would have to collectively manage the debt if one of the councils fell over. Is it?
Technically, yes, but in reality, you'd be saying if there's a massive default, which caused the cascade default, someone has to front up, and you'd assume the government is the last man standing in that respect. Similar position will be with the water reforms and how they manage that. So we're adding much more debt onto the council's balance sheets effectively either through a water entity or through our own balance sheets with regard to this lending.
There are upper limits that we can borrow at.
Yeah.
We're not even there yet, but Auckland, I think, is
pretty close, yeah. Yeah. Now, remembering with the water entities coming on, over time, the debt associated with the water entities transfers to those entities, and we'll have the water piece of our debt disappear off the balance sheet.
Thank you very much, Councillor Miller. Thank you for the report, Calvin. Do I have a move in a seconder? The report. Happy to move. Councillor Reid, seconder. Those in favour, say aye. Aye. Those against? There being none, carried. I'll move on to the Treasury report. Thank you, Calvin.
Mr. Chair, so the Treasury report, I'll just go through a couple of the highlights here. Now, this report is a snapshot as of 30 June, so there's a few numbers that would need to be finalised, but it is a good approximation given we know exactly how much borrowing we've taken at that point in time. So we're closing the year out at 115.2 million of gross debt. So our net position is 85.2, and if we compare that with last quarter, there has been a lift and we have drawn down a little bit of financing over that time. Cost of debt, fixed portion has increased, so 93% of our gross debt is fixed. 93.2 million is gross, and that makes up about 81% of our total book. So a large portion of our debt is still fixed. The average cost of that fixed debt is 3 million, which is a good position when we consider what financing is for the general borrower at the moment. Average life of that debt, fixed debt, is 3.71 years. We move across the debt position. We can see there where it's maturing, and quite a good profile there to make sure that we don't have everything maturing at the one point. Page 40, interest rate risk management. We're within the compliance levels for portion of fixed debt, so that's pleasing. And then looking at our cash investments, on-call cash at 20 million and term deposits of 10, and that term deposit is there partly as an insurance cover for self-insurance, but also there we have some flexibility with the on-call to be able to deal with any short-term issues that may arise. Market-wise, we're seeing the Reserve Bank probably at the upper limit. The economists are saying of where they're going to go, but it's going to probably hang around that limit a little bit longer than anticipated originally, and then we'll see that market starting to soften again. But from a debt point of position, we're in good shape. Happy to take questions.
Thank you very much, Calvin. Councillors, are there any questions? Councillor Miller?
Does our cash management allow us to, rather than having $20 million on call, move further with that to term deposit? Or are we requiring that 20 million to be on call because of our cash requirements in that quarter or month? Seems a lot to have sitting on call.
Yeah, it's a good question, Grant. It fluctuates depending on cycles and where we are in terms of paying down accounts. So June is typically a high spend month, and so 20 June is where we'll see the large outflows go. I think we're also in this period paying away to ECAN their portion of the rates that we're collecting on their behalf. So this is typically a large, so it fluctuates up and down.
Sort of relates to that question I raised earlier, though. We've got 19 million of rates receivable plus 20 million of cash. We've basically got 40 million of cash potentially coming in that quarter, and I guess our outflows aren't, I'm hoping they're not anywhere near 40 million.
No, but it's taking, because that inflow of cash is a quarterly inflow, we have to build it up, and short-term deposits are probably not as effective as we know for managing cash.
A compliment. You're obviously a genius, because we're borrowing money at 3% and getting term deposits at 6%. So great cash management. Just on the interest rate risk management, are we within our policy parameters? Because there's not actually, I can't see the policy parameters on there.
So the red, so this is on page 40, where you can see the stepped graph.
So we're using the steps, that's the policy parameters.
Yeah, so the red line is the bottom limit.
That's the minimum fixed.
Yeah, and the yellow is the max.
Yeah. Okay. Is the way we look at our debt helpful for us? I mean, the net debt position, a lot of that net debt position is made up of DC money held by us, which is potentially going to be sold. And I know it gives us an accounting position, but the reality is that we're unlikely to ever be able to offset our debt by that money, because it gets spent on infrastructure, isn't it?
Yeah, it depends on the balance of those DC accounts. From, I don't know the exact number without having it in front of me, but we are in a deficit on those accounts. So the new entities will be paying us for works that we've undertaken in the past, which have been partially funded, of course, through debt. But you would be right if we're in a surplus in those accounts.
Is it possible, and it may be not possible, but we've increased our core debt by 20 million in the last quarter. Where that funding was directed, is it relatively easy to understand where that 20 million extra debt's gone to? Can we say, well, it's because of the roundabouts at Prebbleton, or is that too simplistic? Is there or is it over the whole organisation?
No, it's I don't have the figure in front of me, but it's easily determined.
Yeah.
A high percentage of our debt heads toward water at this point. Yeah, but that's easily solved. That we can put we can create a report in here that will show where our borrowings are applied to.
Yeah, it'd be quite good to see what the capital applied to.
Thank you.
Thank you.
Thank you very much for the questions, right? Councillor Munt?
Yeah, if this isn't suitable, Calvin, we can have a discussion about it later, but I wanted to understand what the LGFA borrower note is. I'm not familiar with that term, and I've got maturity dates. What does a maturity date imply?
Okay, so the maturity date will be, so if we've got the notes here we talked about prior, so that's part of the connected with the borrowings we have, and so the maturity and date on those will reflect the when the debt matures and we'll need to repay the debt. So typically we would be ending up going out and taking further debt, rolling it forward. I think the key piece that you need to be concerned more around is the interest rate swaps and how they have a maturity date. So what we're doing there is we're borrowing on a floating basis, and then we go to another bank and get an interest rate swap, which allows us to fix the debt. And so it's just a function of how borrowing works on a large scale as opposed to your domestic mortgages.
Thank you very much, Councillor Mutt, for the question, and thank you for the response. Kelvin? For Glenn.
Thanks, Shane. It was quite a general question on this, but Kelvin, are you comfortable with our financial position? And have you got any big concerns for us in the next 12 months leading up to any financial implications we might have, or in the current climate?
It's a good question, and no, I don't, because we've got relatively low levels of debt. Assuming water reforms go through, that will reduce further. We've got a healthy fixed book of debt, which has got a reasonable tenure on it. Look, interest rates will stay higher for longer than what was anticipated. There will be an increased cost of borrowing, but it's not going to be out of sight, and the way we do our financial modelling going into annual plans and long-term plans reflect that.
Thank you very much, Councillor Liddon. Great question. Thank you very much for the report, Calvin. Do I have a mover and a seconder for the report, for the Treasury report? Councillor McInnes, and Councillor Lyle. Those in favour say aye. Those against, there being none, carried. Treasury report. Moving on to 13 major projects report. Jenny. Kia ora, Jenny. Thank you. It's page 42 of Diligent.
Good afternoon. Right, so with the major projects report, just from the report itself, just a couple of points I want to highlight from that is one, the DIA funding that we've got for Three Waters. The date that was put on the contract was 2024, even though the intention was 2027, and that's been amended, which is why that's been updated in the report, and that's been covered off and signed off with DIA. Also, from a major projects perspective, once again, our report is dominated by infrastructure projects, infrastructure property projects, but as signalled in previous meetings, this portfolio may change to a broader set of projects over time. For the moment, I'll take the report as read. If we've got some technical questions around the project, so I've got some support from our infrastructure property team to sort of answer those. But I suspect a lot of that's not so different from what was presented in the infrastructure property report not too long ago. What I wanted to do as a narrative is just put some a lens of this in terms of performance and how we're approaching this as an organisation to strengthen our performance. So work is underway on that. So in terms of a focus and what we're doing as an organisation is looking at what can we do to build better certainty in the delivery and outcomes that we are committing to when we put our budgets forward, as well as improving our controls so we can take earlier interventions to try and mitigate some things becoming issues. And also maintaining transparency as we strengthen our performance. So what this looks like in practice, okay. So for us as an organisation, as you'll see from the reasons why we've got variances in terms of our projects and why some things are on track and off track, some of the things are external that we have a low ability to influence, and there are aspects that we have a high ability to influence, and that's really around our project management practices and our internal resourcing and how we manage scope as an organisation. So at the moment, we're in the process of implementing some project frameworks, which is looking at tools to support our staff and their delivery processes, putting in tighter controls, and also tightening the way that we do our finance practices as well within our projects, and that's in phasing and forecasting and budget accuracy. So work is underway to start our new financial year with strengthening the way that we do some aspects and how we deliver our projects, but also making sure we've got some good structures in there to support our teams delivering for us. And just in terms of context, there's probably a slide that I'd like to share with you all at some point. But where we're looking at controls is actually looking at putting in stronger controls in the areas that we have the ability to influence earlier in the process. So as a project goes over time, we have less ability to influence how that is changes to that without having some major impacts on it. So our controls we're bringing into those earlier phases where we have higher or more ability to make decisions that will influence the outcomes. So. And as you can see also from the report, we've got a number of aspects or variances where we have lower control over. And as part of us looking at how we can manage that, that's really around how we manage our project risks and how that's the best way for us to be able to manage that, because we have a real low ability to control some of those external factors that are influencing us, but we can manage that risk more effectively as we move forward. So just to reinforce, work is underway currently with that and what we're doing with our teams in that space. We expect to see changes over time. I wouldn't expect to see a massive change from month to month, but we do hope that you will see changes over time as we are working on these.
Thank you very much, Judy. Great to hear from you in the report. Councillor Elizabeth Mudd.
Thank you for that. I just wanted to touch on a couple of things. The first one was whārau. Shane and I have been approached by different community groups and members of the community about their wanting to be involvement in that. At which point of the project's delivery is the best time to engage with the community on what they're hoping to have? And my other question was, I'm not sure if anyone here is aware of it, but the Prebbleton roundabout, Shands and Trents has been quite heavily featured apparently on the radio station after someone had an accident there. Yeah. And I think the community are just wanting to know, what's going to be done in terms of the upgrade, and do we have some way of communicating with the community that that's about to be at some point go through and that road to be upgraded. Thanks. Okay.
Thank you, Councillor Mudd. Would you like to answer the questions now, Jenny or Kelvin, or would you like to accumulate them first before you answer the whole lot?
Yeah, on the Prebbleton roundabouts, I'll need to get I'll need to come back to you for that. I'll need to go and speak to the road.
I think, yeah, there was a traffic accident. We did have a wet evening. Yes, there may have been some contributing factors from the road, but I think the best thing is we address that. The police were involved, and so they'll be investigating the accident itself, and we're looking at the state of the roading, and that'll be reported back through the transport and infrastructure.
Thank you.
Sorry, there was, sorry, there was one more, one more question. In terms of Whātaro, in terms of how projects should work, yes, we should be doing the engagement up front as we're going through our planning processes, but I would imagine that we would have a number of touch points with the community as we go through and deliver. What we can do is have a maybe have a chat with that project in terms of the feedback that you've got, Shane.
There's a series of option analysis going on at the moment, which will involve discussions with the community.
That answers your question, Councillor. Thank you. Councillor Reid.
Oh, right. So the questions I was going to ask, sorry, I'm just going to have to log in again. That's timed me out. The first one was on page 54, Recovery Park. So it's red for timing. Why is that?
The feedback that I have on that is that it is we are running later than what we're anticipating on doing. I do notice that we have made an error in the report, and the other aspects of that should be green on that project. So I apologise for that.
Oh no, that's good. And 67.
Yes.
So cycleways feasibility study. I see the dates on it. So it's commenced. So we got current estimate. So that's June 2024 is when we're expecting the report. How's it, the timing? Because then the other one is for the budget completion, June 2027. So what sort of timing are we looking at for this feasibility study to be finished? I'm just conscious that we've obviously got LTP coming up, and these dates don't sit with that.
So there's an engagement there with a party to undertake the feasibility. That's early discussions. So we should have I think the current estimate was in there just due because of as Gina mentioned earlier on, around the timing of the DIA expenditure that has moved out. I would anticipate, and without locking the team into anything here, that we would want to have a good piece of the feasibility sorted before we're into an LTP discussion. So we're looking at September, October to having at least a view.
Okay, cool. Thank you.
Thank you very much, Councillor Reid. Councillor Glidden.
Thank you, Mr. Chair. It's just in regard to the Darfield Pool refurbishment. I see that we have a overspend there, and I'm just wondering, when we signed with Armitage Williams, I believe that they thought they could save $50,000 around a couple.
Yes,
some of the stuff there, and I'm just wondering, can you elaborate a bit more on the value engineering to mitigate increased costs?
Yes, what I might do is
we're carrying out some value engineering at the moment as much as we can. Some of it involves landscaping out in the car park, so reducing some of the spend on, unfortunately, trees and other furniture, and reusing cycle racks where we can from other projects. There are some other savings we're trying to make in the building, in the pools themselves, but we're just working through that at the moment and getting our head exactly around where the costs are going to come out. So hopefully in the next couple of weeks we'll have that totally clear about where we're heading.
Thank you.
Thank you very much, Phil. Thank you very much, Councillor Glidden. Councillor Hassan.
Page 49, Waihora Vitarau. Just with regards to oversight of this particular project, it was presented to us via community services. We have it on finance and performance with regards to funding. And we also have, I guess, property, and I don't know whether it's covered by infrastructure and transport and infrastructure at all with regards to property. So just trying to understand the complexity of where we're putting some of these projects and the overall management and monitoring of them with these subcommittee structures. And I'd just like some clarification, and I mean, it may have to go to a management team to sit down and actually work out who's the lead subcommittee in this particular project. What's the responsibility of those committees under that with regards to costings, or just so we've got some staged understanding of where we need to find information with regards to these subcommittees. That's just one comment, but with regards to this particular project, I note that we still have it on the books with regards to, say, a $10 million project. We've had some updated information from one of the committees in community services, but where that's gone to from here, we don't know. This community consultation feedback happened in April. What's that feedback, and which subcommittee actually should deliver this feedback back to us as councillors, so we understand exactly what the community wanted. And we look at the fact that it's called a multi-purpose facility and Leaston Park Master Plan. So it's looking at the whole, to me, not just one building. Reading this, and yeah, I just think it's very, very important that for prudence that we actually understand the funding, what's the lead agency, and where it can be reported all as a whole and not a fragmented piece of work.
Thank you very much, Councillor Hassan.
Okay, to address that, the purpose of the major projects report is to consolidate all major projects which are occurring across the council, so we can see a portfolio view of it. Delivery of the project will occur across multiple areas of the organisation, and I guess the overall approval, so noting that this project hasn't been approved yet, the council hasn't approved it, and it will return here, as the paper was saying, an indicative date of August with a business case. And my understanding of that business case is at this stage is looking at multiple options based on the feedback that came from council when it was last presented at the community facilities and so on committee. And that incorporated feedback from yourselves and also from the feedback that occurred at the community engagement. And I'm just trying to rack my memory, but I'm pretty sure that there was some high level views of what the community wanted at that meeting. And further, based on the views of the committee, further research is underway around what the project actually will entail. So in terms of how accountability for the delivery of the project, the sponsor of it will be Denise Kidd and Murray Washington, or Murray England in the interim when Murray leaves. There's a joint sponsorship. They will be managing the overall financials and performance, but overall in terms of monitoring performance against projects, it comes back to this committee.
Okay, sorry.
I think did I miss anything there, Deborah, in terms of covering all your points?
I just thanks for that. Look, I just needed to understand what the hierarchy was with regards to these particular projects, because I guess what can really concern me is that to get an idea of the true costs, we can spend a whole lot of money up front and go and draft up a whole lot of designs and pay consultants, and then come back and find, hey, look, we're taking this in another direction. And prudence against ratepayer and cost should be actually, the business case should come first before we actually even enter into the consultants and the drafting and design. That's the way I look at it. So we're not actually changing courses halfway through and spending, $1 million here or whatever, where it could have been better well spent if we know the direction that we're actually going into.
Thank you, Councillor Hassan.
Yeah, I think the one challenge with that is to get a reasonable view on cost. You do have to undertake a degree of work, which means looking at a concept or even at a very high level and having an appropriate QS and come in, because I think where we've been burnt in the past is that staff do their best to make an estimate of the cost, but without that true expertise, we end up running short, and then we approve a spend which is not enough to do what we need to do, and therefore we end up compromising the output. So I agree, we don't want to spend too much, but we need to spend the right amount to do the right thing without going off and spending more than we ever need to do, because we'd underestimated up front.
Thank you very much, Calvin. At the risk of turning this into a conversation.
The other
Yep,
thing
Councillor
too,
Mason.
sorry, the other thing is that we also need to consider, while we've got capital costs here, the ongoing operating costs of some of the designs we're turning up with, with regards to these buildings.
Yeah, key component of the business case.
Thank you very much. Councillor Miller.
Not quite as exciting as that, but back to the cycleways feasibility study. I wonder if we could see the terms of reference for that. There seems to be a wee bit of confusion, particularly around scope. I'd like to understand the Arthur's Pass to Te Wahora. You know, has it got a predetermined route? Is it along the Waimakiriri? Is it along the Selwyn? You know, are we looking further afield to the Rakaia? Is that predetermined, or is it wide open blank page for the feasibility? There also seems to be some confusion around the funding. In this page, you've got 290,000. In the annual plan, it's got 350, of which it says 200 is coming from this better off funding. And then it says 290,000 is here from better off funding. So what is the number? Where is it coming from? As you know, because it's not clear. There's a disparity in numbers here. If you go to page 110 of the annual plan, you'll see that it's 350 plus 200 of better off funding. Here it says 290. If we just get the number agreed on, would be helpful.
It's not 150.
Oh, well,
That's already budgeted, and then they're better off funding.
I'll come back to you on the funding and in terms of scope. Good questions, and maybe turn to your right and request that that's added to the agenda for the Transport and Infrastructure Committee.
Thank you very much, Grant. Have any more questions? Any more questions, councillors? There being none, I have a few questions. Jenny, I thank you very much for your report, and just taking into consideration your comments around influence and how we can look at project development, or perhaps influence with outside constraints. You'll be referring to things like supply chain contracts and PPI production sort of contracts to ensure that, and factoring in the CPI, so that we can get a better, tighter forecast on the performance and the management of supply and that type of thing. Is that what you're indicating?
There are a number of aspects that we'll be looking at, our contracts and how we manage them, and our strategies and how we use all that will be part of what we're doing in that space, as well as actually our scoping and how we can strengthen that more upfront, so we can get better certainty into the numbers that we're putting together as well.
It's very good, and it does speak to the performance of major projects, so I appreciate that. Page 64, the Ellesmere to Pines wastewater pipeline, the contractor is being worked through, design engineer Becker contractor procurement being worked through. So do we already have the Becker report for that? And if we do, can that be circulated?
I'll find that out for you.
Thank you. Page 65. I believe that this might be already answered, but the feasibility study will be coming to council, presume in August, or we haven't received the feasibility study at this point. I may be confused.
We just need to remember on this one that we're funding a feasibility study for the Friends of Ellesmere Hospital. They may decide, and rightly or wrongly, or where they determine to go on this, that they would like us to invest. So we need to just be mindful that the feasibility is of interest, and we're an interested party, but there's nothing in this for us to decide.
Thank you very much, Calvin. Thanks for the clarification there. And I think it was just some reference to some of Grant's comments around the feasibility funding and where that is going to. Point 2 on page 69 to our Runanga partners. Do we have an update on that?
That is probably a question you want to direct at the mayor in terms of progress on that. But my understanding is that work is underway with one of our partners around appointments.
Thank you.
And as we're well aware, the other Runanga is reviewing their structure and how they operate.
And just a reference to your comments, Councillor Hassan, around hierarchy and responsible for particular project. I think that's the determination of these committees, or perhaps the assumption would be that there's responsibilities of all the committees to be responsible for ultimately the performance and the efficiency and prudence of ratepayer money, but also it allows the departments to work together as well on a collective and have collective responsibility for the delivery of it. So I think whilst who is the lead, I think it's a great opportunity that we're working together closer. That's just my thoughts anyway. So that is if there are no further questions. Oh, sorry, Councillor Mutt.
Right, just in regards to page 65, so we're looking again at the Leaston feasibility study, health feasibility study. So obviously it's referring to scoping for the second phase 2 of the feasibility study. It's been a long time in waiting for the first stage to be done. So do we have an indication of how long it's going to take and exactly what it is that they're looking at spending for phase 2 so that we get an idea of the progress?
The Friends of Ellesmere Hospital. Yeah. So the phase 2, it's well within the money that we have been provided by DIA. So what phase 1?
Sorry, Jenny, are you just able to speak into the?
Oh, sorry.
Please.
Yeah. So phase 1 came out as a quite a long list of options. So what it's actually looking at is narrowing down what are the feasible options that came out of that study, so that they've got a little bit more. They can bring a more condensed view back as to what is optional. What is potentially feasible. So and just reiterating Calvin's earlier comment that this is for Friends of Ellesmere Hospital to provide, this is their report, and they're in control of the timelines as well. And when they're ready with what comes out of those reports, they'll be able to come back to council and present a potential whatever they'd like to present. Yeah.
Thank you very much, Jenny. Thank you very much, Councillor Mutt, for the question. Would you like to move the report? So moved, Councillor Munt, and the seconder for the major projects report, Councillor Hassan. Those in favour say aye. Those against, there being none, carried. Next on the agenda is a CCO update on tab 14, page 72.
Okay, this update involves 2 of our CCOs being Orion New Zealand Limited and Cord Limited. What we're including here is Orion have presented their annual report for the year ending 31 March 2023. They have reported a after-tax profit of 21.6 million. It's marginally, and I mean very marginally, below what the target was at 22.1. They've returned to their shareholders 32 million, and noting that we are 10.725% shareholder in that organisation. Also included in this report is the Orion SOI. We presented a draft to this committee earlier in the year, and we provided some feedback on that. I'm not saying that they listened to the feedback directly, but they have re-looked at their cash projections and where they're heading, and they have been able to adjust their dividend up, or their projected dividends up, back to the level that we had originally budgeted for. So pleasing. We still see a potential fall off in the 2026 financial year, and the financial year dates are actually incorrect. They should be 31 March. The next piece on here is around the Cord SOI, and the final SIO hasn't been appended to this. I have seen the version and it has drafts still written over it, so we will have the final here. There is no substantial change to the SOI. Comments made from this committee back were around the importance of health and safety and around sustainability. And I spoke with their management and directors around that. And underneath the SOI is a lot of work that they are doing in both respects. And pleasingly, I saw a really good quality health and safety report come back from them recently, which will go to the Audit and Risk Committee at a later date. Their dividends are as forecast in their SOI. Pleasingly, we have just received a declaration of dividend as of 30 June, which totaled 2.25 million. So that's going to be paid in 2 instalments of 1.25 and 30 September and 1 million in February. And that's on the proviso that conditions remain unchanged and affordability is still there. So pleasing results from both of our CCOs. Take questions.
Thank you very much for the report. Kelvin, does anybody beg to differ? Councillor Miller.
Don't beg to differ, but just questioning what your view is of the Orion dividend policy. Is that FY26? Are we getting a prepayment in 24 and 25 to sort of keep us happy for reducing the dividend in 26?
I think what we're seeing here is a view that their capital works program is not going to be quite as high as they anticipated in those years. They are working currently with the regulator around their price path, and they are discussion that we had around special price path for them to, well, for all network companies to reflect the fact that they need to increase their resilience is being discussed with a view that they will be able to go beyond a WACC type basis. I think what we're seeing here is conservatism in that third year, noting that we'll have 2 more SOIs before we even get to that point, and the world could change quite dramatically. But I'll have to say I'm pleased to see the numbers that have appeared in the 2 closer financial years. And the working relationship with Orion is much improved from where it was, and I think under the leadership of Nigel, it's just a completely different view of where we are. And I know earlier today we're talking about ideas around solar generation. We're now talking with them on a much better standing around where we can both add value, which may not be us building anything or them building anything, but how do we partner with provision of usage of land or lease of land where we're a property owner, they're a distribution provider, and we have potentially other partners coming in who do the hard work of the construction and managing the risk of the investment.
Do you think that the current book value evaluation we note in our accounts accurately reflects our investment in Orion?
We're about to revalue them, so that'll tell us where we're at. But there is a discount on our valuation given our smaller shareholding, so we don't have a control premium put on our valuation.
Councillor Miller, happy with the answers? Does anybody else have any questions? All right, and I guess the reason why I said differ is that it doesn't take a genius to work out that the investment or the level of investment that the council has put into each of the CCOs in Cord, and the other one Orion, is about a 5 times 3 or whatever it is. It's for the same dividend. We've had the discussion before as to the value of the return on dividends. So I guess, Kelvin, the question is moving forward, the continued investment into Orion as an intergenerational asset, how do we reflect that back to our community? What is in the best interest long term or intergenerationally? Where does that look to go as potentially the family jewels?
Perhaps we would have that conversation in public excluded.
Yes. Cool. Okay, thank you very much. I did have one more question, Kelvin, and I've forgotten it. If there's no more questions, councillors, appreciate the call there, Deputy Mayor. Can I have a move into seconder for the report? Councillor Lyle, Deputy Mayor Lyle, and Councillor Sophie McInnes. Those in favour say aye. Those against, carried. Thank you very much for the CCO update. Annual plan update.
Okay, I'll take this paper as read. It's really just closing out the annual planning process. We have now completed the annual plan. The rates have been struck. Just want to draw the attention to some of the media comments over the last couple of weeks around water rates, and just reflecting on that from wearing my other hats around communications and marketing, is just thinking about how we portray some of these rates will be was a useful piece of feedback to actually incorporate in. But I think the key message to provide there is those levels of rates were included in the annual plan. It was there for engagement. We had little to no feedback. We had a small amount of feedback on the affordability of rates, and I don't recall any specific comments about water rates. Because we do issue our water rates on a different invoice, sometimes it gets forgotten that these are rates and that they're incorporated in the total rate. And we do have neighbouring councils that don't meter their water, or they meter it in different ways. Therefore, it's hard to compare district to district. So I think there's a little bit of learning we can do ourselves there, but also we're in a good position with our affordability being at the bottom end of the affordability ladder.
Thank you very much, Kelvin. Do the councillors have any questions? There being none, I just want to say thank you very much to Kelvin, your staff, and all of the staff here at council. On behalf of our councillors, appreciate that, and look forward to a long-term plan. Do we have a move into seconder for that report, annual plan update? Councillor Reid, Councillor Glidden. Thank you. You are there. Those in favour say aye. Those against, there being none, carried. Thank you. Tab 16, long-term plan update.
Yes, the update here is really just that. It's an update on where we're at. This is progressing, and looking forward to in our publicly excluded workshops shortly to discuss assumptions and start to move this further forward. We'll have a discussion around early engagement and looking to get that up and underway later part of this month and into August. So we're really wanting to get early views from the community as to what is important to them in this community, as opposed to probably details around specific projects. It's what are the important things for them as residents and members of the public, members of the community.
Thank you very much, Kelvin. Does anybody have any questions? No, thanks very much. I just wanted to say that we'll be asking our public for a number of consultations coming up soon. There's a representation review, there's the long-term plan, there's future Selwyn. So how we engage, and we engage better because we have heard from our constituents, and how we actually dovetail each of those consultation processes into each other and use the momentum to reduce the level of apathy for council. I think it's going to be quite important. So all the best for all of us. Thank you. Do we have a move in a second for the long-term plan update? Please, Councillor Mugford, Councillor Reid. Those in favour say aye. Those against, there being none, carried. Now we move into the public. Resolution to exclude the public. We have a move into seconder. Councillor Miller and Councillor, someone from this side. Anybody? Munt. Those in favour say aye. Aye. Those against, there being none, carried. Thank you very much for those that have attended online. Appreciate your interest. Look forward to the next one. Thank you very much.